So I'm Dr. A.G. Maitli, Assistant Professor, Department of Commerce with Finance, Dr. SNS Rajashmi College of Arts and Science. This video is about fraud risk factors in forensic accounting. So you already know it is forensic accounting is investigation of fraud that has occurred in financial statement. So the fraud risk factors, they are the circumstances or conditions you can say that may increase the livelihood of fraudulent activities occurring within an organization. So you have to identify these risk factors. It is crucial in implementing effective fraud prevention and detection measures. So fraud risk factors can be categorized as follows. First one is the management and employee characteristics. So lack of integrity. Management or employee within a history or dishonest or unethical behavior. Next, financial pressure. So individual facing financial difficulties may be more susceptible to engaging in fraudulent activities. And then inadequate monitoring. So lack of oversight and monitoring provides opportunities for fraudulent behavior to go undetected. Unwillingness to prosecute. A culture where management is reluctant to take legal action against any may encourage fraud. And then ineffective communication. Poor communication channel also, it is a part of this fraud occurrence. Next one is industry and environmental factors, that is rapid growth. Fast packed growth can lead to inadequate controls and increased opportunities. So complexity of transactions. So when there is large number of transactions, it can also lead to fraud. High turnover. So frequent turnovers employee may lead to insufficient training or oversight, you can say. Significant external pressure. External pressures such as regulatory changes in economical changes may drive individuals to commit fraud. Weak regulatory environment. When the environment is regulatory, industries with tax regulations may be more susceptible for fraudulent activities. So operational characteristics, it includes inadequate internal check. When there is no internal check, then when it is weak or non-existent internal control, it also leads to fraudulent activities. Lack of segregation of duties. When the duties are not segregated, it is a single individuals, when he holds all the duties, so it may lead to fraud activities. Inadequate auditing. If there is auditing is not done periodically, this may also lead to fraudulent activities. Ineffective scrutiny measure. Weak scrutiny measure, both physical and digital, it can expose for fraud risk. And then financial performance factors. Pressure to meet financial targets. Excessive emphasis of meeting financial targets may encourage individuals to manipulate financial results. So inadequate financial oversights, that is lack of independent financial oversights, may also lead to financial fraud. Unrealistic budget. So setting unrealistic budget also may lead to financial fraud. So excessive reliance of few individuals. So only small number of individuals increase risk if they are involved in fraudulent activities. Financial instability. When they are in financial unstable, it also leads to fraud. So technological factors. Inadequate cyber security measures. Poor cyber security measure can also lead to breach and financial fraud. Lack of fraud detection technology. If the failure to invest in advanced fraud detection technology, it may result in overlooking fraudulent activities. Insufficient IT control. That is weak IT control may also unauthorized access and manipulate of critical system. So rapid technological changes. Rapid changes in technology may outpace the organization ability to implement adequate controls. So culture and ethical factors. So here tolerance for unethical behavior. If there is an unethical behavior by the employee, turns blind eye to misconduct, increase high risk of fraud. Lack of whistleblower protection. Absence of protection for whistleblower may discourage individuals from reporting fraudulent activities, inadequate training of ethical behavior. So next one is ethical leadership. So the leader is not ethical. So this tone set by leadership regarding ethical conducts influences organized overall culture. Next, external pressure and influences. Economic downturns. Economically, if there is challenges, may create financial pressure, increasing the livelihood of fraudulent activities. And then competitive pressure. Intense competitive may create environment where individuals feel compelled to engage in fraudulent activities to gain a competitive advantage. And then vendor and customer fraud. Fraudulent activities by vendors or customers can have a cascading impact on the organization. Global economic factors. So factors, exchange rate, global economic conditions may impact on the organization. And then social and demographic factors. So changes in the demographic profile of the workforce may impact the organization risk landscape. And then sectorial norms. Sectorial norms and attitudes towards fraud may influence individual behavior within the organization. So legal and regulatory factors, that is complex regulations, ineffective legal system. And then political and geopolitical factors, that is political instability. So if the politics is not, the government is not stable in a country or region, may contribute to an environment conducive to fraud. And then geopolitical conflicts, geopolitical tensions may impact the organization operation and increase fraud risk. So these are all some of the factors that lead to fraud in an organization. Thank you.